Here's why crypto is the biggest opportunity of the century. But we have to go back in time a little bit. See, the time is April 2007, and you were checking your stock portfolio. Guess what? Your Amazon stock price just jumped from $2 up to $3. Congratulations, you're a genius. You've made a profit of 50% in just a few days, so it's time to sell, get out, right? Well, look, no one has ever gone poor from selling at a profit. This is true. The Amazon price, though, 10 years later hit $48. That's some hindsight for you. Currently, it's worth around $180. So you left a 60x profit if you sold at $3. Now, what's going on here? Why do some stock prices just keep rising? And what does this tell us about the opportunities of investing in the cryptocurrency space right now? What does it mean for our bags? Well, we're going to dive into that. Let's talk about mean reverting commodities. I know that's pretty nerdy, but stay with me. What makes a trader profitable is that he or she buys low, sells high. There's no other way to do it. Don't care what anybody else tells you. There's no other way to do it, okay? Since the dawn of humanity, people have been trading stuff with a fancy contemporary word we came up with, commodities. Since the invention of price charts and commodity exchanges, traders would compete with each other trying to sell high and buy low. In the very funny and, of course, very interesting book classic about trading, Way of the Turtle, the author tells how he and a group of other rookie traders back in the mid-'80s were put to work trading commodities such as heating oil. I know, heating oil. I would I know. Stay with us, okay? Stay with us. Now you're like, what is this? What? We talk about my crypto bags, man. What's going on here? I know. We're going to get to crypto in a minute. This is a very interesting lesson. Stick with it. The heating oil traders, they used a specific method of breakout trading. Now, here's a trading chart of heating oil that the author put in entry and exit points on. So why do you think the price of heating oil went up? Probably a spell of cold winter weather in the US, or maybe some kind of shipment problems, bottlenecks in the ships getting into port, whatever it may be. The point is that the price of heating oil, no doubt, went back to lower levels after the cold spell. The point is, commodity prices tend to revert to the mean. Here is the chart of Brent crude oil over a decade. The trend may be slightly up. You can probably thank inflation for a lot of that, but price rises tend to be followed by corrections back to the mean. And it might be that this traditional frame of mind that traders have been using since the dawn of time that has made people sell their BTC prematurely. It's gone up 50%. Surely it's going to come back down soon, right? Indeed. The crypto prices do have sharp, dramatic, brutal, savage corrections that make you question why you're investing in this damn asset class in the first place. But the trend that they're in is fundamentally different. And more on that in a minute. But before I show you these approaches, just a quick note for you about our free Wealth Mastery newsletter. Look, our readers love it. I'm sure you will too. If you're not signed up yet, you definitely got to check it out. The Wealth Mastery report includes these kinds of topics related to portfolio management and all that kind of stuff, but also all kinds of different insights on airdrops, meme coins, altcoin news, deep dive reports, NFTs, charts, and much, much more. And you can join 125,000 plus weekly readers for free using the link in the description on YouTube or the pinned comment on X. Now let's get into the next part of this conversation. That's stocks with and without network effects. So again, we're talking about stocks as a great example of where we're going with crypto. So here's the chart of Ford Motors over more than 60 years. It's clearly much higher than it was in the 1970s, but it hasn't actually recovered from the crash after the large blow-off top of the late 1990s. Now, unlike Bitcoin and other large cap cryptocurrency coins, the uptrend has definitively been broken. But why? Well, I found sales data that show that, for example, in January 2014, Ford sold 148,000 cars in the USA. 10 years later, in 2024, that number was almost the same, 145,000. They haven't actually gained much market share in a very saturated market. And their super competitive business probably doesn't allow their profit margins to really grow all that much either. Chinese EVs and stuff all that coming to the market all the time. So the stock price isn't really going anywhere. Now, this is not to say that there aren't stocks that don't mean revert. And it's exactly these types of stocks that give us a much clearer clue of why crypto is the biggest opportunity of the century, of your lifetime. Here's the chart of Meta, Facebook. We call it Meta now, since its IPO in 2013. Okay, check this out. Unlike the chart of Ford that we just saw, it has recovered from a crash in 2021, 2022. It went down like 75%, and it's back in its logarithmic growth channel now. Now, why is it in this channel of continuous growth? Well, because it's a social network platform. The value of the network continues to grow exponentially with the number of users. This is called Metcalfe's law. In 2008, Facebook had 100 million users. In 2012, this number was 1 billion. Compare having 10 friends on Facebook with all of your friends on Facebook. The value that you get out of Facebook will, of course, exponentially increase. It will be much bigger, more than 10x, right? And now compare this with Ford. If the number of Ford vehicles on the road increases, will that increase the user experience of driving your Ford? Probably not. In fact, you might even think, gosh, there's a lot of Fords around. Maybe I should get something different just to be a bit different myself. Now, looking at the Meta chart again, know that Facebook already existed since 2004, 9 years before it could be publicly traded. So just imagine having had the opportunity to buy Facebook stock for cents back in the day, just pennies. Unfortunately, the stock didn't trade. But back then, early investors and early employees, they had the option to get Facebook stocks. There's that famous story, of course, of the guy who, did you hear this one? This is very interesting. He got commissioned to do like spray paint a wall in the early Facebook headquarters, and he chose to get paid out in stock options. And then 10 years later, those were worth tens of millions of dollars. That's pretty crazy, right? Anyway, traders and macro analysts are still coming to terms with the fact that these spectacular and continuous price rises of stocks like these, they are not bubbles, but they simply follow a fair valuation of the network's actual value according to Metcalfe's law. So what about crypto? We have to talk crypto now. It's time. Let's talk crypto now that you know the backstory. So crypto networks effects. Okay, so we're finally here. Let's do it. The beauty of crypto is that it's the internet of money. It is a social network of monetary value transfer. When you understand that, you have the aha moment for crypto. It has been a free market phenomenon from the start, meaning that everyone who had a keen eye for innovative technology could have started experimenting in 2011 with mining or buying and accumulating Bitcoin, or of course, subscribed to the Ethereum ICO in 2014, or just bought early in 2016, 2017, whatever, buying these assets for the equivalent of pennies on the dollar. In crypto, of course, everyone can be like that graffiti artist at Facebook's headquarters, and you can be there early. And there's opportunities to be early all the time. You can be there before the institutions. Not for much longer, though. We are getting the suits pretty heavily involved in the space. You can acquire value assets for pennies. New things are launching all the time. Obviously, there's risks. Now, maybe this makes you feel sad, feel like you've missed the boat. I get it. Every new investor has been there. I felt like that in 2017, but many investors before you felt the same, and everyone thought they were late and whenever they got in, okay? When Bitcoin reached $1,000 back in 2013, everybody thought they were late and it crashed more than 80%. And then 2017, they thought they'd missed the boat again when Bitcoin surged up to, over 10K and finally got up to about 20K. And it's been up, 6X since then? Of course, percentage gains won't be as insane as in those early days. That's just not how it works. The numbers are getting too big total market cap wise. Okay. But how early are we still, and how much opportunity is left here? Are there some objective ways to try to estimate Bitcoin's potential market capitalization? Well, take this chart of the Bitcoin market cap versus other market caps like gold and stocks. Look at how tiny Bitcoin is. It's hardly visible even on this diagram. It's a baby still, man. It's still roughly 10 times smaller than gold, probably even smaller than that with a recent gold rally. Anyway, point being, there's a lot of room to grow for a digital native asset in an increasingly digital world. Another 10x for Bitcoin in the coming decade or so. Man, that's not even outrageous. That even feels a bit of a bearish hypothesis to have, actually. I feel like we're going to go even higher than that. $1 million Bitcoin, it's coming, guys. And hey, look, obviously there's more than just Bitcoins, Ethereum, Solana, all that other stuff. Many coins are still early in their adoption curves. In fact, earlier in their adoption curves than Bitcoin, meaning there's more upside potential. More risk, of course. Obviously, there's no free lunch out here, guys. Come on, don't forget that. It is a free market after all. New projects launch every single day. Everyone can create their own meme coin in just a few clicks these days. But will we ever not be early? Will it at some point be just too damn late to jump into crypto? Well, it really depends on how you actually look at it and if and when Bitcoin will have reached its full network potential in terms of total numbers of users and in terms of total value transferred, then it would probably still be worth buying and still be worth holding Bitcoin, even at least compared to holding fiat, which we know is going to go to zero. As long as the money printers will go burr, the value of BTC will go up nominally. It will keep your purchasing power, much like gold does and has, even though gold, after 5,000 years, obviously has reached its full network effect. Look, you and I, we have the good fortune of living in a very wild time, a time with a literal new technology very early in its adoption curve, and with the property of being monetized. The tech is the money. The tech is the money, okay? Imagine that the SMTP protocol for sending emails would have had its own coin. Imagine buying that in the 80s, how rich you'd be right now. Well, now we have such networks with their own coins. It's called crypto. And when you get your hands on these coins and your mind conceptually wrapped around what you're actually buying, these things will act like commodities. And you can act like that commodity trader of heating oil and just hold, chill, and let the network effect play out, right? Up to you. Anyway, thanks for watching. Peace.